Very good morning, everyone. Welcome to Admiral Markets today on the 7th of January. Thanks for joining us. The strategy webinar is going to focus more, at least, than usual on strategy itself. Oh, sorry about that. Hit that button by accident. I'll try to get back to the PowerPoint. 1 second. Anyhow, we're going to be focusing more on strategy than analysis. Strategy, of course, is, in my opinion, perhaps a bit more boring of a webinar, but it depends how you look at it. I like analysis a lot, but strategy, of course, is more straightforward in a way, like yes, no, this is what we're looking for, and that's it. Analysis, I think, is a bit more discretionary, so it's more flexible, maybe, perhaps. But yeah, it depends from person to person what you like more. In any case, before we start, this PowerPoint quickly to explain the following important matters. First of all, this webinar is intended for a global audience. Please take into account that it may not be suitable for everyone. To find out if it is and other details regarding conditions, please visit admiralmarketsglobal.com, select your country or residence, and then contact an appropriate entity. All right, that's the way how you'll find out more about that. But also, that would be the method to find and get the risk disclaimer, But here is a copy of it, and you can find the summary here. Right now, it states that trading for exchange is high risk, and other financial markets too, and it may not be suitable for all traders and investors. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you do agree with the disclaimer, and I thank you for your attention. So strategy, of course, is a simplified method to understand the reality that we're looking at. It allows us to digest the price and basically simply mentally say yes, no, or perhaps maybe under these conditions when we want to trade. Because of course, if we just look at the chart itself and don't have any preconceived idea or pre-planned plan, then it's going to be chaotic. We're going to be tempted to trade maybe things that are not that in the long term not that profitable. So strategy, of course, very useful in that regard. And one of the important pillars or important parts of successful trading, besides, as you know, risk, money management, trading psychology, evaluations, etc. So with that said, let me show you the charts. Oh, 1 second. One other thing, by the way, before I actually look at the charts, as we usually do, we have Euro CPI in 2 hours 13, German unemployment rate in 1 hour and 8. These are interesting things to see because the euro has of course, had a lot of downside pressure, specifically against the dollar, for instance, but recently against the yen too. So it will be interesting to see what kind of figures the eurozone can produce. Kind of curious what that will be looking like. Otherwise, later today we have big news on the dollar, of course, as well. I think that's even more important. Is the ADP and FOMC. So it's going to be an interesting day. Tomorrow we have pound interest rate, and Friday we have NFP. So it's an action-packed week. That this very first week of 2015. If we look at the charts, let's take a look together here. Does anyone? Let me open up the chat. Does anyone have a preference? Let's see. Kaden, good morning. Yeah, we have a lot of news indeed. Does anyone have a preference for a specific strategy? First of all, maybe if anyone is new in here by any chance, if this is one of the first webinars you've ever attended with me or Admiral Markets, specifically me, then let me know. All right, so that I can give you a bit more background on what we do. And otherwise, does anyone have a preference? I'll just use a blank chart for today. I don't know. We'll not complicate things too much. I'll use various templates, but we'll start with the basic, just more neutral kind of blanker chart so you can see price action a bit better for the moment. Later on, I'll switch to the Camarilla and moving averages if need be, okay? Euro dollar, basically a pretty good fall yesterday in the later afternoon New York session, right? And I was in a short actually on the euro dollar, and I decided to grab profit at let me think, 64. I had actually a TP at 34. So I'm talking about 118.34, of course. But price actually just went to 41, so it missed me by 7 pips here. Now what I did was move the TP, excuse me, to 64, because when I saw this formation, I didn't like the odds of price pushing through this particular level. I thought we could get some correction here perhaps. So I wanted to increase the probability of my trade hitting the TP, and there moved up to 64. Why did I do that? Because basically here you have a pin bar, and I was scared that we could indeed maybe perhaps not break this low, right? Price could maybe dip, retrace that candle, and then move up like it is actually doing. It moved down to 54. I took profit at 64, as you can see, a bit higher than the actual turning spot, but that's okay. Now, that has nothing to do with strategy as yet. I'm just showing you, I just wanted to show you the euro dollar and indicate that I was in a short and took profit. Now, if you look at various strategies, that we use various strategies. No one has signaled a preference for any of the strategies, so I'll just use one then myself. Arne is asking for the dollar yen. We'll take a look at that. And we have a new webinar attendee, Badresh. Welcome. I hope I say your name correctly. I'm not 100% sure. But welcome. What we look at basically is trendline breaks, moving average bounces and breaks, Fibonacci retracement strategy, AO strategy sometimes, not too often, and what else? Camarilla. Right, so there are a couple of strategies that we sometimes use in combination with each other. In this regard, it also depends on what a currency pair is doing. Because let's say the currency pair is ranging, then a Fibonacci strategy is not going to make sense. So it wouldn't be that useful. Unless it's still some specific cases it could be okay. But in generally, unless you know when to use it, it's not too good. In this trending mode, Fibonacci is pretty good, right? When it's a trend, it's very good actually. Moving averages, trend is good, right? Camarilla, I think we can use for any kind of environment. So it's going to depend from case to case. Now, for today's session, I really don't have much of a preference. One thing I'm curious about, though, is the trend line here. If the price could get up to the trend line, I think it could be a reasonable good short, a decent probability area. We're always looking for high probability zones, if possible. We don't get those necessarily each hour or each day. I mean, very high probability trades are of course sometimes you get more of the mediocre probability ones than the very high ones logically. But I think that this would be a decently probability trade. The probability of price hitting this resistance and then bouncing down back to at least this 118.75 level, 118.75 level is pretty high. So that's something to look for if price can get there. Right? Yesterday we were looking at a fib trade when we put this fib on, and I was saying look for the 38.2 fib, but the price didn't get there. All right. So what I did was I adjusted the plan after I realized the price wouldn't get there. We were looking at the market around this point. All right. So at that time I thought it was still probable, but then we had a dip, pull back, and we had basically a trend line bounce already in the making. So that's when I decided to take the short on the euro dollar instead of waiting on the 38.2 fib. So we could take this fib off again. So that would be one idea, to short the euro dollar from this area. the other idea could have been, for instance, you might say, okay, you took profit at this spot. How about a counter trend trade to the upside? It's possible, but it's not part of any strategy that I necessarily have on a 1 hour chart, right? So it wouldn't qualify. Just because we take profit doesn't mean we have to join the other side. Let's take a look at some other strategies like fib strategies on this hourly chart. The fib strategy entails that we take the highest swing high, swing low here and move the fib from retracement bounce to target, right? So in this case, it would be from retracement bounce to the minus 618 target, right? So not do we put the fib at the target, but actually at the first turning spot after hitting the target. So we can move the fib from here to here. On the hourly chart here, let's do that. We didn't really have a strong retracement, but we then hit the target, so we can move it from here to here, and we hit the 50 fib and the minus 618 target, so we can move it again. What we're looking for, of course, is the most recent Fibonacci swing high, swing low. Here we had a 38.2 fib, and we just hit the minus 618 target. So, although it actually perhaps just missed it by a few pips, actually just missed it. So it would be perhaps too early to do it, but if we did move it, the fib would look like this. All right, and you can see that any of these fibs with the stop loss above the swing high here would be the Fibonacci trade with a target aiming for 118 and 117.50. So we have a bit of a confluence. We have a trend line trade at the 78.6 fib. So there's a confluence at that level. Let's take a look at moving averages in Camarilla and say what take a look what they say on the hourly chart. When using the moving averages, we can use a double dip. Remember, we used the fact that you can use a 21 EMA band and say, okay, if price gets there twice, the next break below it is a good short. That moment happened on the euro dollar, in fact, right here with this candle, and we had a good fall after that, right? How do you count them? Here. First move back to the 21 band, second move back to the 21 band, and here's the candle below it. That particular trade also worked well on the dollar CAD, as I said yesterday. Remember, did anyone take the dollar CAD yesterday? We were talking about it, and I said there are multiple ways to enter the dollar CAD. It all depends what you prefer the most. And actually, any of those entries would have done perfectly well, in fact. Did anyone take the dollar CAD long? The euro dollar was the same stuff here, using the moving averages. So do we have a trade on the moving averages? No, we don't at the moment, because price is actually heading back to the moving averages. What we're looking for is a trade with the moving averages, so we're looking for price to go back down. So no, we don't have that at the moment. Do we have anything on pivot points? Well, the only thing we could say is that if price gets back to a confluence of pivot points here at about 119.35, we do see a lot of confluence there. So it supports the previous idea already of a short at higher spot. And if we look at the Camarilla, we could say the same story basically. So that's basically it. Shorting it higher seems to be the ultimate confluence. Does it mean it's a guarantee for a win? No, but it does seem to be the trade that gives the most confidence. We've only looked at the 1 hour chart basically so far. Of course, we can look at other time frames as well on the euro dollar and apply the same overall strategies to those time frames. But basically, if you look at the euro dollar on higher time frames, it's very simple, right? All price action to the left is higher than current price. So obviously, on all time frames, it's in a major downtrend. And on all time frames, price is pretty far from the moving averages. So what does that mean? That means that we could have a small reversal to the mean trade, which I don't think is worth the effort. More importantly, it basically means we look for a pullback for more downtrend, I would say. Yes, there is a slight divergence here, but not on the 4 hour, not on the daily, so it's not too important. It was perhaps important enough for me to take profit. So no other, I mean, basically the lower time frames for me are the more important time frames. At the moment, the higher time frames are just saying one thing to me is downtrend. And I don't see any setups on those as yet, because the price has accelerated too far away. So the only thing left is to catch some of the downtrend on the lower time frame, if you follow what I mean. So let's take a look at the dollar CAD. Edith took that trade, great job. Let's take a look at it. If I can find it, here it is. Yesterday we were saying this is a big impulse, big momentum. Bull flag, but the bull flag went below the 21 band. Look for a double dip. So what are the methods? One of the methods was entry here at the blue dot, entry at the pullback, or at the second break after the pullback. Right? All of them would have worked out. If you were looking for the double dip, then that would have been, the entry would have been here in fact. Stop loss below the low, right? And you're handsomely in profit at the moment. There are two things a trader could do. If you're in that trade right now, you could take profit here because it is showing a bit of a struggle here. You could move the stop loss also just below this low and show stop it. You can move it to break even as well and try to ride the tide a bit more. You can move it to the candle low of yesterday, another option. So it all depends on the risk appetite that you have, in honesty, and if that matches what you're looking for in a trade. That's an example of a trade that we talked about yesterday before it happened, pre-fact. So let's talk about new trades. If you have any questions about the trail stop or trade management in general, just let me know. Let's take a look at the pound dollar. Pound dollar is the same stuff as the euro dollar. It's heavily downtrend, therefore no trades on the higher time frames, but we could catch maybe follow-throughs and extensions on the lower time frames. So for that, I think the best is the Camarilla in this case. Camarilla level explains the intraday zones. So Bajrash, if you don't know this indicator, it basically explains where within the trading day is price at. If it's in between H3 and L3, it's basically kind of in this neutral zone. If it's above H3, it's basically in a bullish area. And if it's below L3, it's in a bearish area. But if price is in a heavy downtrend on the higher time frames, then this particular area could be an intraday bullish zone, but it's heavily pressured by the bigger downtrend, and you could see kind of a fading moment like that and a return of the trend. That's the strategy of the Camarilla basically, is that of course you can use the L3 and H3 to be basically cautious of any trading and then use breakouts for upside and downside. You can use Camarilla to trade within this zone and use range trading, for instance. Or you can use the bigger trend to establish if you want to basically short when there's an intraday break to the upside or in the downtrend, or the opposite. Use these zones for upside if you're in an uptrend and there's an intraday downside pressure. So L3, H3 we can use as bounce break levels, but also H4 and H4 and L4. L4 and H5 are the targets basically. Right, that's the simplest ways of using the Camarilla strategy. Just to repeat one more time. It's a very simple tool. It's very cool because it kind of dissects the intraday trading into zones, so that you have kind of a feeling for what price could do and what are the ranges it could reach within the trading day. Because if you don't use the Camarilla, it's kind of like you have a sense maybe for the longer term, of course, but the short term, you're kind of I would call it like you are a little bit on quicksand. You don't know where your feet are really. You don't know exactly how price is or what it could do today. You could have maybe a long-term idea of you want to short it, but price could heavily go against you throughout the trading day. Using Camarilla, you get more sense of, you have more compass, you have more direction for the intraday trading. So when looking at that, for the pound dollar, we're in a heavy downtrend, so I wouldn't be looking to long H3, a break of H3. I would be more looking to short the Camarilla levels when it gets up to H4, H3 zone. All right, we do have divergence on the pound dollar. So when you look at the moving averages, we want to be careful. We might even want to wait for a double dip here on the moving averages. You look at the moving averages, you want to see price go above it, below it, a bit above it, and then down, and then that's where you have your short. Doesn't mean that the Camarilla short isn't good. It could still, as I said, price will probably break above the moving averages here a bit, but then run into resistance. Let's take a look at where the top moving average here is this orange line. So indeed, if we hit H3 or H4, price will be above the 21 band on the hourly, which is what we're expecting. Does it make sense to trade it up for a few pips? Not in my opinion. It's too little profit there. The fibs could be okay, but at this moment I'm not a particular fan of it because we have a very large swing line here and we're getting a bit of divergence. So not a big fan of using fibs on this particular time frame. So let's get that particular view. Trend lines, we can use this trend line as well, like the euro dollar, to have an idea of a resistance zone as well. And that's it, because higher time frames would not give any setups as yet. Stop losses, I mean, if the safest ones are above this daily top here, but that's pretty far from current price. If, of course, we're looking at intraday shorts, that is very far from price, so that wouldn't make sense. From intraday trading, we would probably have to go above H5. Yeah, H5 indeed. That would be the only reasonable solution at this point. Let's see, we got pivot point confluence, last but not least the pivot points, weekly S1, daily R1 at 153, 152.32. Excuse me. Yeah, so it looks like H4 would be an optimal shorting zone here, with the stop loss basically somewhere above here, into close to the 153 area there. Still a sizable stop loss, but you know, the thing is that with the pound dollar, it's not so uncommon before you know, before you can trade it with a decent safety margin. So it's not so strange. Alrighty, 1 second, folks. Let me. One second, folks. Just give me 30 seconds. Alrighty. Thanks for your patience. Let's see. Mikey, I wish you also a healthy and good profitable 2015 indeed. Thank you so much. And everyone else, of course. let's see. Does everyone have a preference? Aaron has a preference for dollar yen, so let's take a look at that. Kalian wanted to take a look at the Kiwi, but I don't think he's here anymore, so I will wait for him to get back. Let's see. Dollar yen is having some kind of struggle here. If we forget the strategy cap for a moment and put on our analysis cap just for a second, if you don't mind, it is more or less in a corrective mode where we have a pretty strong fall here and we're looking at a corrective type of structure. As I said yesterday, the fall that occurred here caused a 200 pip wick on the yearly candle and monthly candle of 2014 in December. So we're seeing not the significant dollar strength as we have seen against the euro and pound because of that. So what kind of levels would I be looking for the trend to continue? Because I would expect the trend to continue because it was still a very strong dollar yen close when looking at monthly and yearly candle. But we could see a bit of a consolidation first before a follow-through happens. So what kind of level would I want to see? What level would I expect the retracement to occur? We actually are using this fib. At the moment, we bounce off the 38.2 fib, and just recently at the 50. It could be the 50. It could, but I'm not. I wouldn't attach a high probability to that. I think that statistically at this point, I would say that 61.8, probably 78.6, is the most likely in a contracting wedge potential like this. So ultimately, I would like price to get to the 78.6 fib, and I think it could be an interesting long area. Now, whether you decide to take profit, a quick profit, or to hang on to the trade and wait for a bigger profit by looking for these kind of targets, both are actually valid. The best solution could even be to use a mix. Half profit here, half profit higher. So the stop loss, of course, would have to be below this low. And the entry itself could be at the 78.6 with an entry order, or we could wait for a market order and let price hit the 78.6 fib and wait for some kind of candlestick pattern at that fib. So those are the main options for trading the dollar yen. Okay, this is the most interesting. Now, the backup scenario would be if price doesn't get to the 78.6 fib, if it starts breaking here to the upside. I wouldn't be taking that break myself. But, I mean, it could happen. I could take it, but it would have to be under certain circumstances. I'll show you on the 1 hour chart in a second. The better trade I would like if it pushes a decent amount above the yearly high. I would like to see it maybe 100 pips above it. If it does break by 100 pips or more, and then hooks back, it would be definitely an interesting long. It doesn't have to hook back exactly to the level, but roughly speaking. Now there is one let's say one possibility for me to take that break on. But it would have to be on the hourly chart, and then I would use the moving averages, and it would only be if, first of all, the 21 band is above the 89, which it probably would be once it breaks out above this trend line. And I would like to see price basically break above it and hook back to the moving averages. Let's see, it would have to be a certain consolidation pattern that I feel comfortable with, that if it breaks above the moving averages, I would take it. So it would have to kind of like break above it kind of settle back into the moving averages, bounce off it once or twice there, and then break again. Then that would be okay. If price hits it and consolidates before it, I would be still a bit skeptical. I want to see a clear signal here. It's a bit difficult to describe because it's so far in the future, but I would like to see a clear signal that it's not going to make a false kind of breakout, or it's having struggle with this top. In any doubt, if there's any doubt, I'd rather skip it, because it is a yearly high that is close by. The better one, though, at the moment, I think, is still from the retracement level. In fact, if price is showing any signs of struggle here, it could be a counterintuitive maybe, or counter opinion against the herd kind of short even, but it is a riskier one. And to be honest, although it's an option, I don't think it's a really very serious option for myself. All right, let's take a look at Aussie and Pound Yen. Aussie retrace. I don't know if anyone watched by any chance had time to take a quick look at my video analysis that I do on Mondays, but I was talking about the Aussie going back to fibs, and it could be a good short. That basically is panning out pretty well. But now it is a spot that, although there's a very strong downtrend, we are right at a support. So does it make sense to go short here? Not much, right? The expectations of profitability at this spot by shorting is not that great, I think. I mean, the better profitability zone wasn't here, right? Anywhere at the fibs, and now you're up in profit. Now price really is going to have to show its path. Is it going to break through, or is it going to bounce? Either one is probably just as likely. So I don't see any high probability here. It's 50-50, which 50-50 is not a high probability. Well, it could be a high rewarding 50-50 if you think you can. If you think that you're able to make a 4-to-1 trade, it still could be worth it, of course, but I don't see that potential here. So at the moment, it's kind of like in a no man's zone, or no trading zone. If you see what I mean. Otherwise, it's definitely in a downtrend. And if it actually does spike up a bit, it could still be a good short, just like on the euro dollar and pound dollar. That's basically it. Sweet and simple, I guess. We could take a look at the Camarilla still. So anywhere where it's H3 or H4, shorting zone here. Not too fond of the breakouts in this case. All right, so that's it actually. I have nothing to add. I mean, we can take a look at long-term trends here, 4-hour chart. We do have a kind of a double dip perhaps, with price going above the 21 band and here going above the 21 band. And this is the first breakthrough. So yes, it is a good short. And if you are looking at the chart from a 4-hour perspective, the shorting area was here at this candle, and pending order there is still valid with the stop loss, in fact, above this high here. If you get a better price, of course, then it's even better. That's the 4-hour world. The daily world doesn't have much of a setup at the moment because price is already too far away from the moving averages. Kiwi, let's take a look at the Kiwi. Now the Kiwi went further than I expected yesterday. I was looking at 77.80, perhaps 77.70, but it went to 78. Oh, no, 78.10 even. Okay, I thought 78.08 or something. But so extended a bit further than that. Now, luckily, any stop loss should have not been hit, as far as I remember, because of the fact that we have a top here. So, but let me double check. I'm not 100% sure anymore. Not 100% sure. I myself didn't take the Kiwi shorts. I don't remember exactly what stop loss I was mentioning yesterday, but logically speaking, I think I would say that it should be above this top. And if it didn't, then I should have said it. But now at the moment, it is looking a bit of as a hard case. The odds are not that good anymore, I think. Looks like a coin flip because of course we have the classical zigzag here. We had some reaction here, but now it's just flat. It could really go anywhere. It's just flat here. I wouldn't dare to say if there's any higher probability to any of the sides, especially if you look at the 4-hour chart. It is choppy anyhow. It's true that when price was getting into more a higher zone, it tended to turn down more. But we had also a lot of ups and downs before it moved down. Look at here, for instance, a lot of noise. Looks too noisy. If anyone did take the trade, I would rather just take it out right here, right now, for break even. I don't see any reason to stay in this trade. I don't think, or not even break even, it's actually up a few pips. So one could move it to break even, just above this top here. And if it still moves down, great. If it doesn't, out for no risk. The Kiwi, therefore, doesn't look like a great short at the moment. If you look at the moving averages here, it's all intertwined. The hourly is flat, intertwined. Only the daily could have some evidence for downside, but it doesn't really look too appealing. The only thing that could work out is a breakout, perhaps. I mean, there is always that opportunity for breakouts. Breakouts I do like the most in trending modes, but it could work out if price pushes through these trend lines in L3. We could see the breakout like this. Hi, Kalian. Just talked about Kiwi actually right now at the moment you entered. Basically, the quick summary here is that I'm not a big fan of how it looks like at the moment. It's looking very choppy on the hourly, 4-hour, and slight downtrend in the daily. The 30-minute chart 2 is basically impulse, but here's impulse 2, and now it's just going flat. So I'm not a big fan of the current environment at all, both ways. But if someone did take the short at 77.70 or 77.80, then I'll probably move it to break even, put it just above this fractal, somewhere in here. If price does turn around, you still get the bonus pips, and if it doesn't, you're at no risk. Considering the vulnerability and insecurity of the Kiwi, I think it makes the most sense. Let's see, Kaden is aiming for 77.20, 77, which makes sense indeed, I think. Yes. 1 second, folks. Alrighty. So yeah, that makes sense. Those targets. 77.20 is the L3. Even down to 76.90. Indeed. It do make a lot of sense indeed. So that's probably the best approach. No risk, but still open at because Kaden, you even have 77.90. You got it even at a better price, which means you're up at about 40 pips at the moment. Indeed. So that's great. and I would see no reason to add to that to leave the risk on. Sorry. Now, if you're looking for the breakout, you already realize that actually by taking the breakout trade, you're entering when others are exiting, perhaps. So that's always risky, of course. A breakout, and therefore, hence, a breakout, anyhow, in this environment is perhaps not the most ideal. It is possible. I'm not sure how big fan I am of it. Let's take a look at other pairs to see if there's anything else going on. Pound yen, let's see. Pound yen. One of the most, I think, important fibs that we can put on the chart is from here to here on the daily chart, because it indicates the corrective zigzag. Price stopped at the 78.6 fib and has hit the minus 272 target. That itself could be a bouncing spot already, but it's bouncing quite slowly and looks more like a bear flag. And despite the fact that it could be a bouncing spot, I'm not a particular fan of going for long at the moment. But it indicates a level, a spot where we're in a downtrend. We're not downtrend. We're correcting in a pretty impulsive zigzag, let me say it this way. But we're at a potential bouncing spot that hasn't got too much speed as yet. I don't know. It doesn't seem to be in a very interesting a spot at the moment for any trader that I can see. It's minus 618. If it gets here, it could look good for a bouncing spot, even stronger than the minus 272. But looking at this, I don't see any trade setup at the moment. To put it very simple. I mean, we can still analyze it and we can look for things to happen, but right now I don't really see much of that interests me. Is there something, let me turn it the other way around. Is there something you had in mind, Daryl, that specifically that you were looking at that I can maybe look at too and see what I think about it? Because maybe there's something you have in mind that you're looking at, like I was thinking about this and this. We could take a look at that specifically. So far, I like the dollar shorts. I mean the longs of the dollars actually. The shorts on the EU, GU, the AU, I guess the most at the moment. A bounce up is possible indeed. We did hit that minus 272 target. So let's take a look at that perspective. I wouldn't go long now, though. We're at the daily pivot point, and we're fighting against the 21 band. Let me think for a second. I guess the 30-minute chart could be good. Even the 15 perhaps. What we would probably want to see is a dip down, but failure to continue and then a rise again. And what we're probably trying to look for is price to go back above the 21 band on the 15 or 30-minute chart. and then we could see the second part of a correction. What we're probably seeing here is the first part, then we'll see a dip as part of the second, and then we'll probably see the second part of the upside correction. The best bounce trade up could be kind of this area here where I have the pink. So what we're looking for is price to get below and then go back above. What we then see probably is the 21 band cross this 89 slightly, and it will use it as a kind of the support for some kind of bounce. Now, what kind of target is realistic? One way of doing it is one way is usually by putting a fib on this swing high, swing low here, the very first correction. One of the characteristics I'm looking for is an impulse. Is this an impulse? A bit, but it's not the biggest, but it could be. So in that regard, the target could be the minus 618 target at 180, 120, up to 182. All right, 182.50. It's quite a wide zone. I mean, if you look at the 4-hour band, it could, if it does retrace back to the 4-hour band here, then 182 seems like a good target. Yeah, 182 probably is a well-balanced, I would say, target. So that's what I think. If you want to look for a bounce, I think that's the best way to monitor it at the moment. If you were looking at this pair earlier ago, maybe you took a riskier long off of the target, but that's always has its risks, of course. At the moment, that I don't see a long bounce. I mean, it could bounce, but I wouldn't see enough probability in longing it right here. So let's take a look at, yeah, no problem. So let's take a look at the CAD yen for Caesar, and Wei is saying that the 21 band cleanly defines the trend. And yeah, I agree. It's pretty cool, isn't it? If you look at that, I totally agree. Oh, it's really nice how price kind of hugs that level. Right here and right now, 50-minute chart too. It's probably my favorite too, and it's really, I like it even more than the 34. A trader I know actually, I was aware of the 21, but actually pushed me to the 21 more than the 34 because of and the reason why he used it more was because the 20, besides the fact that 21 is a fib number, 20 is also used in Bollinger Bands. 20 is a bit closer to price action, therefore, also. 20 is also used more like for traders sometimes that use like 918. It's closer to 918. It's closer to the 2040 sometimes that traders use. So there's some, I think, merit in using 21 instead of 34. But I mean, ultimately, I think both are great. Let's see. Euro odd and CAD yen. Let me actually first take a look at CAD yen. I haven't looked at CAD yen, so I'm not sure what to expect here. Let's see. All right. couple of things we could do. We could put I mean, this is a very high time frame, so maybe not the best of things to do, but we can see that we are at a target on the monthly chart, which makes the upside a bit vulnerable. We can also see that we're divergence on the weekly chart. The daily chart had a very strong fall here on the CAD yen. 700 pip fall. That's a lot more than the 200 pip fall that we saw on the dollar yen. So the yen weakness here against the CAD looks a bit vulnerable to me. 61/8 fib here. And although we are in a big uptrend on the higher time frames, this particular momentum looks more like a zigzag potential. But we are right at the bottom, so that's the problem. If it does bounce here, we could see maybe some triangle formation. A riskier counter trend trade here on the lower time frame could be a break of this trend line. To the downside, I would only see a trade at the moment if price retraces up to close enough to resistance, which it's still pretty far from. So that's the only thing at the moment. So despite the uptrend, it looks more like a bearish zigzag, but how do we trade a bearish zigzag is more difficult, and the odds are not that good here. The odds would look a lot better from here, or I guess if price eventually does break a bit, and well, I don't know about that. The space is then not so much here. I don't know. I think a pullback is still probably the best. Yeah, that's about it, I guess. I'm not a very big fan here of this CAD yen, to be honest, but when I'm looking at it, I didn't look at it though beforehand. So let's see. Euro odd is looking bearish to me ever since basically this daily pin bar here, and that particular short worked out well, and we had potential for more shorts, but I didn't trade any of those. But it has been moving nicely down after indeed this pin bar. So actually has moved down 550 pips. So it was a good reversal spotting. At the moment, it of course now is about halfway the upside. Let's see if is that a potential for some worry on the bearish side. Let's take a look. We have a big wick here on the monthly chart. So if we look at last month's low, that is a level I think we should want to see break for downside. To me, looking at the longer time picture, also looking at this weekly, you're seeing every week a downside candle. So I think the downside here is more prevalent. So I am, in that regard, looking for shorts, but not right here. It's the same story. Unfortunately, I'm sorry to bore you with the same repetitive story, but that's unfortunately the similarity here across the board is that there's a trend, but price is right at support or resistance. So we need price to hook back and pull back. Now, the only way I might take a breakout is by using the 21 band on the hourly, for instance. We already have price moving up here one time above it, right? We have one break above it. price will probably dip below it again, which I would not take that break because, as I said, price is already at the monthly low. I mean, it could work, but I don't think the probability is too good. Price will probably go back up again like this. All right? That's a crucial decision spot right here because there's a probability that price, at that spot, we could see the bigger correction, or we can see price head back lower and below the band, and we could get a breakout. That breakout to the downside is the only one that is, I think, stands a chance. So at that blue circle is where I'm getting interested in looking for a potential setup. Are we looking for price action signals? Are there wicks at that point? That probably the breakout, the reversal to the upside is not going to happen. But if is there a full good sized candle above the 21 band, then probably the chance of a breakout reversal to the upside is decent. And what probably then will happen is that this will happen. We have correction, dip, correction, follow through. And by avoiding a short at the blue circle, we basically avoided a loss there. All right. Now, if you wait, if it doesn't happen, if you get this upside dip, upside, and there's failure here and it starts to move down, then this break where I have the green circle to the downside looks good, because then indeed the correction is over probably. We had kind of a bear flag, and at that time the bearish breakout looks more probable. So the answer to your odd, I think, is more time. Give it more time to show itself. And if it does either spontaneously fall like a stone here, then we shouldn't judge our decisions about what the market does, because we don't know if or what it will do ever. So we have to always make decisions what we know and judge decisions about based on what we knew at the time and what we decided at the time. So that's okay. Johnson, thank you for welcoming everyone. Let's see. Does anyone have any particular pair in mind? Aussie. Aussie looks bearish and looks like a short from higher though, just like the euro dollar and pound dollar. Looks like a good shorting area somewhere where the daily, weekly points are there. Confluence, H4, H3, and the trend line that is visible here on this hourly, I think. Yeah, that looks good to me, that zone indeed. 81.30 probably seems a bit more likely to me, but it could always extend a few pips higher than that, definitely. Yes, that looks good to me too. Stop loss above the 81.60. If price can go there, I have no idea really. It would be a great price if it gets to 81.30 already. 81.50 could be probably pushing it a bit, I think. 81.30 I think is still okay. 81.15 I don't think so. Ultimately though, indeed, it could be a short anywhere from 80 here, in fact, up to 81.30. Depends, how much are you willing to sacrifice the price for this trade. If you really want this trade, you'll probably take it at a lower price. If you're okay with missing the trade, you can probably demand a better price because you're okay with that. So you don't mind if you miss it. That's always a bit of a trade-off there. Yep, that looks like a good level to me as a stop loss. Florin Kiwi I consider as not an interesting, not as interesting as the pound, euro, Aussie at the moment. Looks more like a very messy 4-hour chart and up and down zigzag momentum. So I wasn't too big fan of the Kiwi, to be honest. But if anyone did take the short yesterday, based on what maybe Nenad wrote or what I said in yesterday's webinar, then I recommended to move it to break even at the moment. Gold, let's take a look at gold. Okay. If you look at the weekly chart, we see 2, 4, 6, 8 weeks that have not been able yet to break this bottom. I therefore think that the downside is not as strong as it seemed when it started to push through this bottom. It's taking too long. Therefore, the likelihood of an upside retracement is higher and is pretty decent, perhaps, when looking at the time factor. So if we then take that knowledge down to the daily, you can see that the weekly consolidation looks corrective here, kind of funky little wedge. And if we take it down to the 4-hour chart, we actually see that price has been able to break through some resistance lines like this. Something like that, perhaps. On a 4-hour chart, we can see even the kind of the upside slant here at the moment. So if anything, it does look more like a counter trend upside potential. Maybe putting a fib like this and waiting for a pullback for more upside. Basically, we're putting a fib on a weekly, this week's candle so far. Target, conservative target 1238. More aggressive target somewhere to 1260. Stop loss would have to be below the bottom. And the entry at the 50, probably. Seems the most logical at the moment. It's a counter trend trade, but I do think that there are supportive arguments that could justify that. All right, let's take a look at the dollar yen. Intraday level. All right, let's take a look. $115. You missed 115. I'm a bit confused with the numbers. 115. We reached 115 mid-December. If we can get there again, depends. If we put a fib from this swing high to this swing low, I would be interested in longs for 116.60, the 78.6 fib. There is a slight chance it could even get to this fib, which is 113.50 or 113.80. But for the moment, 116.60 seems is the level I'm waiting for, at least for long. $115. I'm not too, I mean, it could be a double bottom perhaps, but for the moment, I think that's the level I'm looking for, the most probable level, more probable than 115 at the moment, I think. Could even be 117.50. Alrighty. If you don't have any questions, then let me show you the premium webinar. None is, by the way, we're going to take a look at Forex range bars plus trading method. It is only for live accounts, though. It's to January the 25th. Then later today, Ned is going to take a look at the Bollinger Band strategy. January 25th is a Sunday, by the way. Bollinger Band strategy, and tomorrow we're going to take a look at drawdown. I highly recommend the Bollinger Band strategy is of course great, but I think for the long-term understanding of what you have to be prepared to in trading, I would above all recommend, of all the webinars so far we've had here and then tonight with animal markets, if there's any single webinar I would probably recommend it's going to be this one. So that's how important I think it is, because without understanding this, I think anything else, all else doesn't really matter. So. Kaden was talking about 118.25. Let's take a look. If it gets down to, I don't know, I think I would not be looking for longs as yet. I think it could be traced deeper. Only from deeper levels I would be looking at, from the L4, the L5, 78, 61.8. Not earlier than that, I would say at the moment. Unless there's a breakout here. But it has to be a very steady breakout, and I'll be very cautious of not looking for any false breakouts there. All right, folks, thank you so much for joining us today. We'll be back tomorrow and, later today and tomorrow. And wish you happy hunting, good trading, and talk to you soon. Cheers.